Okay, hi everyone, welcome to this new update video. What I would like to talk about today is kind of a breakdown, once again, the execution patterns that I covered in bootcamp, because I see some kind of misconceptions when it comes to identifying these patterns. So yeah, I figured out. I shared the cheat sheet kind of thing last week, but yeah, I still kind of think that this is worth to actually go through a little bit more and show you some charts as well and everything. So yeah, the first things first, we have the three execution patterns. The failed swing, the QM, and the cluster. That's kind of set. And also we are basically, or what I do, I don't know if you do the same, but what I do and what I will be talking about today is I work on this kind of a basis of three time frames. You have the highest time frame, which I did this. The charts you will see today are on this H4 30-minute approach that I covered previously. This is kind of this medium term intra-week trading type. This is something that I do quite a bit these days. After I moved, this allows me to leave the charts, for a bit if I want to, and also, but still be fairly active when it comes to trading and everything. So first of all, like I said, we have the highest time frame, which for this example is going to be daily. If you are day trading, I would still keep it on daily. If you are scalping, that you probably don't need a daily chart. You should go a little bit lower. Uh, which I also have a weekly here, but the daily and the weekly time frames for this purpose are not something that you'll be get that many trades of. Obviously you can have your trading time frame as a daily chart or weekly chart, which means that you are only taking trades that are based on these two time frames. But obviously that requires a lot of patience and a lot of sitting on hands, because that won't be as many setups happening. But if you will use the trading time frames such as H4, which for this purpose that I will be using, then you will have plenty, or you will still have trades during the week, but and also you will be able to catch some nice runners. And since you are trading based on H4 chart, this will allow you to kind of monitor the markets around the H4 closes and still have a little bit of a time as well. And the execution of the trades is on the 30-minute chart. So the first setup, the failed swing, this one is the most complicated one to execute. First of all, you need to be present at the chart. So that's kind of a thing. And also, you are basically using a market order, therefore, market can kind of swing through your stop loss very quickly, especially since these things happen during the pickup of the volatility. Therefore, it's really kind of a risky thing to do, the aggressive entries into this. Obviously the reward from this is that you can get really tight entry with a tight stop basically. So where you can spot these on your trading time frame, it's very simple. The swing points on daily H4, whatever you get. If we are going to take a look at something like, for example, AUD/USD, we have in here basically kind of the level of support. You have this low right here. We are looking at the chart right here at the left. You have lows, all these lows right here. This is a new weekly candle, and you have this kind of a candle that takes out basically all these lows. Another thing, let me show you. We have a Solana chart right here. This is a daily time frame. This bottom left chart right here. You have a level of weekly resistance. This weekly swing point. You came here. Take out the high, close below. So this is your failed swing. There are few variations of this. First of all, if you want to be kind of the safest and taking the ones with the highest probability, only look at the swings that when market really came into the level and came out. spend decent amount of time basically outside of it. So this is like a deep swing in price. Something that you can do, if we're gonna take a look on ES here, is if you will get really aggressive about this thing, you will be basically just tracking all the swing points. And let me just enlarge this. So you will have all your kind of H4 swing points in chart, or whatever the time frame you are using for trading, and you will just kind of be marking out these as a failed swing. You have a previous swing point on the trading time frame, which is almost very subtle, just below. But yeah, you will be basically going through all the swing point on the trading time frame and just kind of marking them out, and doesn't look for this kind of a deep swing in price. Basically, you don't have any sort of deep swing here, you don't have any deep swing there as well. This is the more aggressive approach. I kind of try to find the sweet spot between the both in most cases, like when you have really just kind of one swing point, then you are something like this is very aggressive approach basically. But it can work, obviously. You have these, but your expectations from the trades needs to also be much smaller than when you have something like I showed you in Solana, where you had really this kind of deep swing in and out from the market. If I'm going to show you this again, you have this swing point right here. Market really fell from here, came into it, big swing, you take it out, big reaction. So you need to understand that you can kind of mark out every single swing point as a failed swing, but you need to have expectations for the targets as well. So these are the failed swing. I think this is very kind of straightforward. On the other hand, and this is kind of the classic approach which you have with SFPs and everything, is that market goes above the resistance, close below, we have a wick. This is confirming the failed swing. Obviously opposite side, market goes below the support, close above, failed swing. What I also consider to be the failed swing is this situation when you have a high relative volume candle that will close through the level, and you have high relative volume candle, the next immediate candle that rejects the level. I'm not sure if I will very quickly find out one example for this, because these don't happen that often, to be fair. But yeah, you kind of get the point basically. If these candles don't have the high relative volume, it still can be valid. But basically some situation like this, when you break outside of this level, you have this kind of previous resistance, you close through it, but then almost immediately you are back below. So this is never a good sign. You want to see this kind of form of acceptance if you are breaking the level, but I will be talking about this in a second. So when it comes to the execution, there are two ways how you can execute these trades. The first one, this is the aggressive, and this is the market order at the, I have H1 here, but whatever time frame is your trading time frame, close, and this candle has to have the high relative volume and footprint confluence. So the example of this is obviously, if you're gonna take a look on ES, this happened recently. You had this very aggressive H1 failed swing, but you also have a huge pickup in the high relative volume here, because this is US open, and once this candle is going to close, you will just enter the market short. The things that I need to see to do this is first of all, the candle needs to have a high relative volume, which you can see here it does. There is a significant pickup of the volume, even though it will always be on the start of the RTH session. You can see how compared to last 3 days the volume was much higher. So this is the requirement number one, and the requirement number two is I need a footprint confluence, which obviously looks something like this. This is just a random 30-minute footprint on the Bitcoin, so don't look at the levels. But I found the two of these in a kind of same space. First of all, this is for longs. You have a kind of a higher negative delta, which you can see in just delta numbers, or in these kind of bars. So you have large selling coming into the level, this is where the candle closed, this is your wick, and this is the highest volume. You can see that there is a POC here as well, and you have this high negative delta basically here, so it makes this kind of a B-shape footprint with selling at the bottom. Opposite of this obviously is here. You have a wick above the level, candle close below, and you have this kind of P-shape with high positive delta at the top. So these are the two conditions where I would execute the failed swing as the market order. The second approach for this is much more conservative, and this is that you will wait for the H4 kind of structure to break out and form basically a cluster or QM setup. So we can see this here on the AUD/USD. This is the trade that I mentioned, is that this is the candle that made the low. As you can see here, there was no kind of a large selling coming into the level. There was a little bit of a pickup of the volume, although I'm looking at the spot market, but still, we closed through the level. So at the 30-minute close, you are still kind of doubtful. Then we had this very slow kind of grind from the level. But once this happened, basically, this is the H4 candle. You formed the H4 cluster, which I'll be talking about in a minute. But even if we wouldn't, and let's say that the market would kind of, close just through kind of these highs here, not this one, but these highs here, and the H4 kind of swing point would be still all the way over there, so you wouldn't have this kind of confirmed break on the H4 as well. This is your confirmation of the failed swing. Obviously these are the lows you took, and all on the left side as well. So it's here, and then you have this kind of confirmation for the cluster to go basically long on a retest of this, and I will be talking about this thing in a second. So this is the second way of how you can trade a failed swing. Obviously, the downside of this, let's if it would be this, although this H4 closed above it, but still you have this kind of failure from the level. The downside of this is obviously that you might never get filled. Basically, market can just kind of sell off and continue going down before without coming back and filling you. So these are the two ways how I trade failed swings. Daily, once again, H4 ones as well. And when it comes to how kind of deep swing has to be, if it's just any kind of swing high or swing low, or if you are just these kind of deep moves into the price, try to find some kind of a middle ground. With that, it's this is quite of a discretionary thing, but also, for example, let's say that you don't have any kind, and you have a little bit of a compression here, which I will be talking about in a second. But let's say that you have a really clean kind of level, in here basically, where it's just kind of like simple SR. This is previous level of support. This is like previous level of support, going to be tested as resistance, and market just kind of stop under this for a second. So I don't trade the simple SR levels, but I would trade this as a failed swing, because although it was in very immediate proximity, we are testing some bigger level basically. So this is kind of this middle ground to find when it comes to these things. So the second setup, this is the cluster. This is something that I see a lot of you struggle a lot, and you can feel free to kind of take screenshots from this. Just don't send them to anyone, please. But the cluster is basically the continuation trade, and for me it has to fill three requirements. If it doesn't meet all three of them, if let's say that only two of these are met, I don't trade these things as clusters basically. So the requirements are here, and you can see this little bit kind of a visualization of that. There has to be a break of previous structure, which is the previous swing high that made the low. Okay. this has been a discussion in a Discord. Actually, someone asked me this the other day. Let me just show you the example. It's this trade right here. Just give me a second. Open original. This was a day trade that I took basically, and I took it as a cluster here on this time frame right here. What is the break of structure? Because a lot of people will take a look at this and they think that it's this kind of a high right here, and we just kind of failed the level in there. For me, the structure is broken when the last swing high that made a low is broken, which if you're going to take in this kind of whole area, this is the 5-minute swing high right here. This is the swing high. This made this low. So after we close above this is for me a break of the structure. And obviously it's much more coming to this trade, then the structure was broken here. This was coming from the H1 level. You had a footprint confluence and all of this stuff. But when it comes to purely a market structure, then obviously if I'm going to kind of draw this, you have just kind of market going down. The structure is broken if the last swing high that produced the last low is broken. Okay, so something like this. If the market would just be going down and you would have something like this, then and this would be just kind of minor swing high still, we get above this and this is the structure broken from me. So the first requirement, break of the market structure, this is fairly simple one. The second one is the liquidity gap move. As I don't like to credit ICT, there is this fair value gap indicator on TradingView. It's does the job when it comes to what I consider to be a liquidity gap. Is obviously this kind of a move from the level. I'm going to show you this on this AUD USD. Is this, ideally you want to have this candle to have a high relative volume. That's kind of a extra confluence, but the liquidity gap from the level is basically this right here, because after this candle closed, then you have this kind of untested section where the candle on the left and candle on the right never filled it, with any kind of wick or whatever. So this is your gap in price. You have another one right here, high volume selling, and the candle on the left has a wick there, and the candle on the right has a wick there, and market just kind of continues from there, and then it's going to fill it. So this is the second requirement I have for the clusters on the trading time frame. And the last one is no excess at the top and the bottom, and that's something that most of you struggle with a lot, but this is the most important thing for me. And you will see sometimes these things just kind of react with the excess, and this is it happens obviously, but this is the excess. This is the compression. This is something that I would never for example take this level as a cluster here, because okay, we had a solid amount of buying from the level on the H4. Obviously it's where I kind of would set my trade here, but if you're gonna take a look just below you can see how many of these compressing kind of lows are here. If for example if looking at the H4 in this area, this candle for me is not a cluster, although it made a new high, kind of solid amount of buying, but I'm not going to buy into this. Compression below, it's this candle, for example, right here, okay, we had a little bit of excess, but look how we left the level. You pushed higher on the H4, we tested the level basically immediately. So also not a cluster for me. This one, large amount of buying, breaking the structure here, or even breaking the structure there, because this is the last swing high that made this low. Look below this, you have a double bottom basically. Here I'm not going to be marking this out as a cluster. This thing right here is a cluster for me, although once again this one is kind of tricky because this is, once again, there is not really this buying pressure, but you have the excess, you have the breaking structure. So what I would do with this level is, for example, I would just mark out the whole area and look if we are going to test it. We tested it very shallowly here, but I would like to see a bigger pullback to the level. What is the cluster? And we will be taking a look at the AUD/USD again on this H4 chart, which is right here. You can see that after this made this failed swing, this then turns into the H4 cluster. This is the high, makes the low. You have this high volume buying. You leave the gap here, and you have the excess as you took the lows below this. So when it comes to the execution of these things, it's fairly simple. I am looking at the trading time frame where I need to find a cluster that has a same criteria, same valid criteria basically as the H4 cluster had. Okay, so I will show you the examples in a second. One last note: if you see the engulfing candle on a daily chart or weekly chart, which is kind of setting up the bias for my trades, if they happen, you will find a lot of times the H4 cluster inside them. You can most likely to trade. But let me show you something that we had very similar situation on the Euro/USD with the push from the level after this, I believe, took something on the left. We have this little bit of a area, even though you have basically excess under the low, so this is your H4 failed swing, and then after the push it's turning into the H4 cluster. First of all, some people would be kind of scared with the wick in here, but this is once again when the compression comes in place. As you can take a look, it's here basically. You can see that on the 30-minute, high makes this low, it breaks the level, and then you can see how you are coming back to the level. You make this perfect market structure type with lower highs and lower lows. This is your compression to the downside. It's very likely that this is going to get taken. And now coming to the details, you can see that this is the Euro/USD, and the AUD/USD basically looked completely the same when it comes to your 30-minute cluster. But this one on the Euro/USD is not meeting all the criteria because you have a double bottom. Okay, this low did not make any sort of excess to the downside for this to be a valid 30-minute cluster. So you have two options in this case. The first of all is you can still execute it as the 30-minute cluster or your trading time frame cluster, because you have this higher time frame bias on the H4. I think this was on the H4. You can put your limit order basically at the top of the 30-minute cluster, but your stop loss has to go into the H4 invalidation. The second option is obviously wait if we are going to take the compression which happened here and then kind of buy into this move up to the upside. But it's completely fine, especially now you are just kind of looking at a few tick difference. Although this makes a difference in the risk to reward, this is not something massive. But what I want to show you as well is if you're gonna take a look at the AUD/USD, which basically made the same pattern. You had this move after you took out the low, so you make the excess, you push to the upside. This little cleaner, kind of stronger close on the H4 as well. You are coming back to the level with this compression, perfect type of market structure. So this is another kind of confluence for you. But if you are going to take a look at the 30-minute chart, which we will be kind of marking out. I don't when it comes to the marking out the cluster on the trading time frame or the H4 or daily, I mark out basically just kind of the last bar before the move. So I would be have marked something like this. But when it comes to the time frame where I execute the trades, I don't want to miss the trade because I went to kind of a too narrow. I'm not going to mark out this candle right here on a 30-minute, but kind of the last, this structure basically. This is like the last down bar. We made a low, but I want to narrow down my entry, but I don't want to be narrowing it too much to miss the trade basically. So, and also, what is important, you can also first of all look at your volume profile, because very often you will see, and I hope you can see this in a video, you will have this kind of HVN formed. So this is a good kind of a indication where your cluster should be. But what is important here for this 30-minute structure is that we took out the low before we move to the upside. Okay, you can see, we had a swing low, market makes an excess, moves to the upside. So this is your kind of a better 30-minute structure compared to Euro USD, where basically you had lows looking like this, so there was no compression to the downside. And for this case, you can put your stop, let's say that you're gonna take it here, and you can just put your stop under the 30-minute compression. One last thing for, I think this is gold, and this is kind of going a little, maybe too aggressive for some people, but still, something that I would be considering is valid. You have a H4 cluster there, okay, you had excess above the high on the left, this is this swing point on the H4. There was a solid amount of selling coming in. Obviously, this was not kind of a one candle, mostly due to this happening, for right to the end of the day. So this is like a overnight session, which always is much slower, but still, large amount of selling. If you're going to zoom in all the way in, this would be your liquidity gap, which wasn't unfilled, because obviously this candle on the H4, and if you would use that indicator, this FVG by Nephew Sam, this would be marked out as well, because there is this little bit of a candle body that was never filled. But yeah, this is a valid H4 cluster for me. But if I am going to take a look on the 30-minute chart, I don't really have a kind of much of a level to execute from. That these 30-minute candles are quite a mess in the first place, so there is nothing inside the 30-minute chart. If for example there would be structure that is looking, like let's say that you make this high, then you kind of make another high, and then it's going to take an out on the 30-minute chart, and you had this kind of a very nice setup that we had on the AUD USD. Then I'm obviously all over it going with a limit order, but I don't have in there, so I'm watching the level. It gets tested, it makes this kind of small failed swing on a 30-minute, and it starts the selling off. So how would I basically jump into the trade? And this is like a fairly aggressive thing to do, but let's say that first of all you have several things here. You have this kind of compression, you have this target. For the sake of the gold, there is also this higher time frame idea that there is like a quadruple bottom which wasn't taken, so this is something where I would really like to be in a position basically. You have this idea in mind basically that you just want to be short in kind of an immediate proximity, and you will use just a trading time frame to watch if there is a valid setup on that. And you can see that we have basically one here, although this wasn't ideal because the sell-off from this level is not that huge, but you took out the previous high, you sold off, this is the low that made this high, so the structure is broken. You have a little bit in this candle body right here, which is kind of unfilled, but I would just prefer if the candle would look something like this. Obviously, But yeah, this is your, not the A plus, but like I said, very aggressive thing. This is your 30-minute cluster in here, and you can see market tested it, sold off from there. Another cluster, then we kind of sell off. We will test this H4 area. For me, this is more of a SR than a cluster, because this is, at this point, if you're gonna take a look at H4, fair bit amount of compression here, but it's still the level of SR. You are going to go to test it, and then you kind of form this little bit of a QM on the 30-minute, yeah, something like this. So you basically just wait for this excess on the 30-minute chart and jump in. This was very hard trade to get into, but if you want to be if you have, for example, this highest time frame bias, then this is the way how you can kind of jump into these positions. And the last example and the last setup that I would take is the QM. It also has 3 requirements, and it also must meet all 3 of them to be valid QM, basically. So first of all, the left shoulder low has to be broken. This is your market structure shift. This is the last low that made this high. We talked about this. There has to be space created between retest, and it cannot be one candle. So what I mean by this, and funnily that I mentioned this when I'm short right now in BTC, which doesn't look too well, but I will talk about this in a second as well. This is not really a space you want to see, but there are more factors kind of playing it. So first of all, this structure can be identified at all the failed swing, all the QM, all the clusters. So as you can see, these patterns overlap a lot in the first place. So it's just kind of a visual help for you to give you the idea. But the exception when I would be kind of more aggressive is, for example, this. There are basically two situations where I would really be violating any of these rules. First of all, this is a solid level. And if you're gonna take a look on a daily, this is very flat low. There is basically a double bottom here. If there is also this kind of push to the upside. Once again, this kind of slower grind, decompressing move basically. So yeah, sometimes you need to kind of break this. The issue with the space created is that you are obviously facing a possibility of this being a V reversal. And if I'm going to take a look on the ETH, which first of all is looking more bullish from this perspective. We are just kind of testing this area here, although the test wasn't deep enough. If you are kind of wondering how I would see this structure right here, because we have this little bit of a cluster here. If I would mark out the whole candle in this section, on the 30-minute time frame, you have your cluster here. This is a QM as well, because you regain the support, but for me this is no trade because of this. Okay, so, and we even didn't came deep enough anyway. What I skipped, which I shouldn't do, was BNB, and I think this is well more defined. I pulled the order, funnily enough I wouldn't get filled, but yeah, you have a H4 cluster, which is also daily engulfing candle, by the way. In here, you took out the low, so the excess is there. Where I would be executing this, as QM basically, and I wanted to get long here. Okay, so because obviously you could go super insane and try to kind of squeeze it as much as possible. I don't do that. This is kind of a last level. I think even I had a limit order here basically, because this last kind of a support, big level of support. We broke it, got above it. My limit order was here. I would never get filled, funnily enough, so not that much of a pain because I pulled the order here when we were selling off yesterday. But yeah, this is how I would be executing this one. and if you are going to be realistic, you can say this is excess. Of course of course it is, but this is not something like, if we would, for example, pause here, if we had this push above the level, then we would kind of pause here, and the market would be looking something like this once again and then move again. I wouldn't be buying this because this is very clean excess. On the other hand, these are like 2 candles basically before the move, so you need to be able to kind of spot the difference, and this obviously comes with a little bit of a more experience. So yeah, the QM, the space created between the retest, once again, cannot be one candle. For sake of this trade, of BTC, it's not one candle. I have this in the rules that it, if this would be, if this H4 would sell off and then the next H4 would be back at the level, I'm not taking it. We had 3 candles. This was like 8 hours basically until we got into the retest. Okay, it still fine. Still not the biggest fan of the structure here because it can easily make a V-shaped reversal. But it's not going to be like 100% times perfect. It's still discretionary strategy. You need to be understanding what you're targeting, for example, how things look on the higher time frame and all that. And the last one is the high arrival or the clear excess level on the head. And funnily enough, this is not ideal as well because we have this compression in here on the left. But still, we had this H4 failed swing, so we took out the highs. The day from the prior day has the naked point of control. The volume got distributed here. If you take a look on a footprint, there was a lot of buying here, so definitely there are people trapped. I would be considering this as kind of a good structure for head basically, because if you are going to take a look on the H4, although I marked out this whole area as a cluster on the like I said, these are just kind of your patterns, your visual helps to get the context. This is your QM basically. This is the high on the left shoulder, got broken here, going to retest there, sell off. Maybe. But one other thing, if you are wondering if you should be marking out the wicks, if you should be marking out the bodies, because if you would mark out the bodies, it would be here. For me, I mark out the levels which had the most kind of a significance. For this case, it would be in here, okay? Because you had a little bit of a retest here, clean retest there, acted as support there as well. So this is my QM level. If I would just should plot it on a one kind of price chart, and obviously can like move it a little bit. How I would execute this thing, if you want to be aggressive, you will just put your limit order there. In this case right here, if you are just or like aggressive, if you just want to use a limit order, you'll put it here. This for me also, obviously we took out the high here on the 30-minute chart first of all, so super aggressive would be stop above the high. Considering that there is this structure right here on the 30-minute, you have these kind of two lower highs. I am considering this to be a compression. This move right here, so my stop is goes above the high basically. The second way to execute this is that you would once again let it test the level, and you have a 30-minute failed swing here. If we are going to take a look at footprint, you have a 30-minute failed swing with the valid absorption at the highs. As this candle, you have this kind of P shape with high by delta. So you can either get in on a candle close, which is here, or you can wait after the structure is broken, and this is going to a little bit, it looks little bit messier, but it's not actually that complicated once again. on the 30-minute chart, this swing low, this is the last swing low before the high was made. We close below it, and if you really just want to get a little better entry, what I tend to do is just put my limit order here and treat this as a cluster, although obviously it doesn't have the space, it just has the excess basically. So yeah, when it comes to these kind of lower time frames and I have the whole idea for and I just want to get in, then I'm obviously much less strict than I usually would be, because obviously this is that failed swing, taking out the highs, and yeah, so market order below that, or just kind of retest of first level you can see. One last example of this I want to show you is USD yen, and this happened right here basically, and the QMs and the clusters are, in most cases the head on the H4 will be exactly looking like a cluster. So like I said, these just patterns, they are very similar. The overall context and overall trends and other things play kind of a bigger importance than just price patterns. So first and foremost, you push from here. So from what I kind of talked about in this video, if you're gonna take a look on this H4 chart, is this a valid cluster, this candle right here? Well, it's not, because you have on the H4 very clean kind of a triple higher lows here. Okay, so this for me is a form of compression. There was no excess on H4 chart before the move, although it made this gap and although it broke above the last high that made this low. Okay, so this is not a valid cluster. You can see that we trade below it, and then basically we form the H4 QM, which funnily enough I have marked out here as a cluster. Okay, so but we form basically this. Okay, you have a level of support, you make this kind of a move under that, you have this excess coming in here, and you break the high here as well, and you are not back within the first candle. This is the first thing. The second thing, what is important here, is that USD JPY is in a massive uptrend, and you have a daily failed swing from a couple of days ago. So it's kind of your edge, you want to be long basically. We have very kind of weak highs in here, at least until you would kind of fill this section, it's still, it would be a great trade basically to be long. So you are going to form this QM in here, and this is the tricky one, because and I wasn't trading this, but obviously, this is the level where you would put your limit order on the 30-minute time frame. Even I would very likely to put it here, okay, because this is this last 30-minute candle, the made a move. To be fair, for this case, this level is better, okay, because we have support, we broke it, acted as resistance and pushed from there. So this is a good level to put the limit order in. Same with the BNB that I showed you. We came shy a few pips and never turned back basically. There is one thing you can do about this. First of all, once again, you can jump to the trade basically on the way. If you would like, okay, I'm missing this completely, this wouldn't be enough for me, but you take the low, high relative volumes, maybe I wouldn't trade this personally. I know that I wouldn't, so this is not the best example, because this doesn't meet the criteria. The push from this level is very tiny, and also you don't really break the structure, you just kind of hover around here. So I wouldn't be setting limit order here, and this is in a huge trend, so you don't get many chances. But there is one thing you can do with this, and I tend to do this sometimes when I have a strong daily bias. Like I would say that USD JPY being in this kind of massive trend, You have a daily swing, basically daily failed swing from a couple of days ago, and then also this day right here, which was the day that we pushed from the level, closes as another kind of a failure here. So this is very solid. If you're gonna take a look at the left, you have this huge gap to fill, so you know that there will be very little resistance if we're going to start to push this, because obviously this is so thin. And you know, above you have this kind of compression above you, so I would consider this to be very strong trade to take, and the trade that I definitely don't want to miss. There are basically two things you can do. The first one is, if the risk reward on H4 itself or your trading time frame is sufficient enough, you know, for this case it would be, let's say, targeting the high, it's 3R to the high, you are fine to taking it, you know, you will just take it from the trading time frame. The second option, and this would be basically the same, is I would mark out the whole move down. Okay, because obviously if you are marking out 30-minute cluster, you just mark out basically or if you are just marking out the cluster, you are marking out basically the last candle, you know, that made the low, which in this case is this one. But if I want to be more kind of conservative with this, I'm going to mark out all these candles that made the low. So, you know, the selling basically to the low started here. You know, there is naked POC there as well. So you will just kind of mark out the move that made the low, and you know, go with there. So yeah, this is when you really don't want to miss the trade, and you don't mind a little bit of drawdown, like when you have very high conviction, basically, like daily levels, you know, strong trends and so on and so forth. This is when you want to be a little bit more aggressive. But you know, I still, if the structure above this wouldn't be look like this, you know, with this kind of thin move, with the daily failed swing, if this would be just H4QM, you know, I'm putting my limit order basically at kind of top of this box. I'm missing the trade, you know, not much you can do there. The last setup that I take is trading into the higher time frame level. This is usually daily and weekly swing points. Even if I do this intra-week trading, I don't really trade into H4 swing points. I really just want to be this kind of clean daily and weekly swings. So let's say that you have a swing point right here, market kind of move from that, but then you start to forming a structure which is very usually a QM on 30 minute, in a close proximity to the swing point. The risk reward here makes sense. I'm taking a trade like this. This trade happened yesterday in the USD JPY. So let me just show you. New week opened. You have high of the last week. You know, so sorry, or you just make a high. You have a high here basically, which is like a high. It was just a high in this case. Okay, this is just kind of a level where we sold from. On a daily, you know, you have this level of resistance basically. It was a kind of important level. We took it on Monday and we started selling down from it. But look how, in what kind of manner basically this happened. This was a, like I said, you know, daily swing point in here. Although we took it on a Monday, we once again make this extreme slow grinding kind of compression move to the downside. I want to be long, betting that we are going to test this level again and basically take out all these kind of people who just kind of piling into the short from the level. But how I'm going to execute this, obviously I'm not going to be just blindly buying, you know, on the way down. Ideally, you want to see the H4 failed swing, which, you know, this was yesterday market opened. We had this little bit of a structure which you could kind of consider to be, you know, tradable, because you took out the low, you know, pushed to the upside. I didn't take that. I wanted to wait if the H4 swing can be taken, which is kind of a place where market paused on after we hit the level. And as you can see, you know, we sold from here, market then closed like a h4 failed swing right here. So this is a valid kind of thing to trade. For me, I'm getting the alert, but if you just take a look at the 30-minute chart, I don't really have any kind of a level to get. But I was watching this closely, and once we make a new low, we break it to the upside, and you took out the lows here, and you have not ideal once again. The push from the level could be much better, but you have this 30-minute cluster, and even the bodies here were fine. You really had these kind of bigger bodied candles. You will go limit here, stop below the low, target just the high here. Okay, so this is where I trade into the levels on the higher time frames. When I see, even when the level gets tested, for example, and we are selling what from here, but I see this kind of a compression to the downside. I still think that there is a move to to take it from there, and I will wait. But I'm not going to trade this blindly. I'm just going to wait for ideally h4 failed swing, and then break, this kind of structural break into the cluster or QM on 30-minute chart. So yeah, that's basically it. I think what I didn't mention, if you are day trading, you can obviously add the VWAP and the cumulative volume delta to your decision making. You can use these things. You can use CVD to kind of see the absorption at the high, which is great kind of addition for QMs or whatever. All the things that I covered in bootcamp basically. But yeah, this is kind of a universal thing when it comes to the price action and when it comes to the levels. What I basically look at and what I do. At the start of each session, I will be talking about this H4 daily approach. I am marking out all the key swing points, on a daily and weekly. Once again, being this kind of a middle between, very aggressive next to next kind of swings and more these kind of deeper moves in price. I'm marking out the clusters that have excess. They did have a move that broke the structure, and the move was this kind of a liquidity gap type of move. And I'm looking for the QMs that took the low of the left shoulder. The head either took some more kind of a significant level, or there was a pickup in selling, the higher relative volume, and broke the structure once again to the upside. So yeah, this is it. I hope this explains the patterns and the things that I look at a little bit more in depth. Yeah, thanks for the attention.